The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And of course, we've got a little bit of action out here. The FOMC just came out and started blabbing a little bit. And their blabbing is now over. And we saw a little bit of a pop when the news came out as they started to read and dig a little bit farther into it. I read it as quickly as possible. I think the reason that we kind of did a little reversal back here on the S&Ps, at least, was that they're basically saying, at least the way I read it, that they're thinking employment's about as good as it can get for them to hold rates low. And when you look at it, that's what they're doing. And I think what they're doing is that they know that real employment rates aren't 5%. But they're using the government's monkeying with those as an excuse to at least put enough back in the tank in case there is problems down the line. They'll at least be able to cut rates again. Right now, they have a very narrow window where they can do it. Not a lot of discussion about China, if any at all, when I read it. So for them, they look like they're fairly narrowly focused on U.S. markets, and China is not a big deal, at least yet to them. And they're looking at these numbers in employment and saying, we just don't think it can get any better. Us holding these down is probably causing more problems than not. And boy, I'd like to have a few more gallons in the tank just in case, the gas station just isn't up there, isn't open in the next corner. Maybe we have to go the one down, maybe another mile or two down the road. It'd be nice to have just a little bit, maybe the little needle on the gas tank, just a little bit above that tick that says E. And so we'll see how this plays out. But we're up 7 points, 2.47 billion shares. We are up 7.5 points on the S&P as we get started. And we will get this. We will get this party started right now.
And it's all just a little bit of history repeating.
1869, the New York Stock Exchange is formed from the merger of the New York Stock Exchange and Exchange Board with the Open Board and the Government Board, and probably some surfboards and some other stuff where Treasury bonds were traded on this day in 1869. And that's kind of the modern era of the big street name person. Of course, across the next 20, 30 years, the trading of commodities and the trading of rail and steel stocks were probably 90% of the business. I'd say that's probably true. On this day in 1869, the big board is made. Anyway, if we look at things other than how the last tick in the last 5 minutes went, we should be looking at one thing, and that is the movement in these stocks that are traditionally thought as defense stocks. When we buy stuff from them here in the United States, I'm going to call them war stocks when their big movements are attributed to selling to governments overseas. And that's exactly what we've had. Two of these companies coming out, and both of them saying basically the same thing, and that is everybody in the world is now spooked with the United States going back to the policies of the 30s and Fortress America, and it doesn't have anything to do with us, and all the other stuff that everybody believed in the 30s that I think we're kind of trying to think about now. But huge moves. Even Boeing got a little taste today, up a 1.5%. Lockheed Martin up 3%. Northrop Grumman was the one that is big. Apparently, everybody and their dog's going to order an F-16, up 7.6%. General Dynamics. That's General Dynamics F-16, up 5%. So we've got every one of these companies out here that is beating the war drum, and they got orders out the wazoo over the last pretty much 2 months. I guess the idea that the United States, at least that's the way I heard it said today, the United States is no longer going to be the policeman for the world. Everybody's going to have to arm up. And the question is that going to prevent war or make it much more likely? I was talking in the den earlier, just looking over the news for the last 2 weeks. We find that the Pakistanis have ordered 10 submarines from the Chinese. The people in India have ordered several aircraft carriers. Both Taiwan and China and Japan have some new, almost 30 apiece submarines going into the South China Sea. My guess is that you'll be able to actually walk across between Taiwan and China just on the backs of these submarines. They're putting so many in them. And of course, that many and that small of a pond, always a chance for trouble. We also see that the disruption, even in Russia, is starting to hit things. I didn't report on this on Monday. It was over the weekend. But even Putin has fired and getting rid of about 100,000 people in the various bureaucracies. He can't any longer pay for them with the price of crude down where it's at. So he's giving them all their walking papers. It was kind of quiet. I'm surprised I didn't see much more about it. But a lot of moving pieces in a big chess game that is normally for all the marbles. And when we talk about these folks, Japan, although they haven't said anything about it, has lots of nukes. They're kind of the equivalent of Israelis when it comes to having a bunch and not saying anything about them. And that way they can say, no mas, no mas. Don't speak English, sir. I don't know what you mean by nuke. They've got plenty. They've been working on plutonium bombs for a long time. And that's why they have those nuclear facilities that got swamped several years ago with the tsunami. But there's a lot of moving pieces out there. Don't be surprised to see some things go off, because it's everybody walking around with a stick of dynamite that's sweating. And all you got to do is drop one, and things start moving very quickly. And it's going to be interesting to see how this works out. For pretty much since World War II, there's been a doctrine to make sure that you handle things when they're small. You don't let them get big. And we are abandoning that policy that seemed to work fairly well for one that didn't seem to work so well for the first 2 world wars. But I do digress. Other stocks that are moving a great deal out here, Akamai Technologies was up 5%. This is just, I put these up just before 2 o'clock. Buffalo Wild Wings was up 13%. Tableau Software is down 17%. Gilead was up almost 3%. Twitter off almost 14%. We'll talk about that. And Yelp. We talked about Yelp for a long time. I talked about their legal problems maybe 9 months or a year ago. And I'll go through these in no specific orders. Yelp, the biggest problem is a lot of people are already doing what they're doing. And secondarily, all the legal problems they had because they wanted everybody to be anonymous. And what happened was that one dry cleaner would want to target his competitor down the street and make it look like all they did was hand back rags to people after they brought in their dry cleaning. And of course, the courts would no longer allow, after several rounds through the court, Yelp tried to shield people from saying nasty things about businesses. That did not hold up in court. And that is the real problem now, is that if you're actually taken to task for everything you say, like me, then it becomes quite problematic when you just want to rain on some business and they sue you and they find out exactly who you are. It became very problematic. They wanted a wild, wild west kind of reporting of businesses and let God sort them out. And the government did not cooperate. I think that was the biggest problem that they had. Now, of course, most of their employees paid in stock options, and the stock is going the wrong way for those to pay off. And of course, they continue to lose more and more people. I think it was the CFO. I think CFO left too last night, and the rats are deserting a sinking ship in Yelp. Twitter, we had some comments earlier about that. What's wrong with it? They had several things. One is the biggest, and that is that they have no growth in users. They get new users, and people leave it fairly quickly. They've been working on a problem that is just the worst part of the internet, and that is people acting not well. Let me put it that way. Same problem with Yelp, and that is people just doing things that are counteractive, saying things that they would never say to somebody in person, but somehow they're a Hulk Hogan on Twitter in size, not in what they said. Of course, maybe a 120-pound weakling in reality. So they get on Twitter and they start yelling from their parents' basements of all kinds of things, and it's become incredibly tough to navigate, and a lot of people call it very mean. And it's been tough to navigate a Wild West, and better description of that would probably be Lord of the Flies. Probably better to say it. So Twitter has been a place where it is a Lord of the Flies kind of arrangement. Everybody getting together and beating on people that they think they can gang up on, at least textually. And they've done some work on trying to get rid of a lot of those people that are just internet trolls, as they're discussed, but problematic. Gilead Science, of course, coming out with great news on their hepatitis C drug, not doing that sector any good today. The IBB actually down, even on some very, very exciting news from them. One of the IBB is off almost 7 points at 375.97, even with the market trying to bounce back up to highs. We're at 2105, so we're kind of back up to where we were when the news came out. 2.55 billion shares. Tableau Software, another one of these companies that was growing 50, 60, 70% every single quarter. And guess what? They came in light. They didn't get their 70% that everybody was talking about, and they're off a huge amount. Buffalo Wild Wings, got to talk about that. Akamai, we've got to talk about that when we come back. But a lot of stuff to yak about. We'll be back in just a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, we're talking about a few of these other companies here when we came back, and a few other things going on, checking the markets out here for what's going on. 2104. Basically, we've been in a 3 or 4 point range here since the announcement. No big deal. At least nothing now. 2.6 billion shares. I was going to talk about Buffalo Wild Wings because I suspect this is starting to act like a lot of other stocks. And that is, a lot of people know that everything's going to be horrible on them. They're all getting short. And probably too many people diving on top of them only to be taken out by some big operators in the market. This thing went to 205 or 206, I think is what I saw, after hours last night. And of course, it bounced 180 or 190 or something right now. In fact, do I have it up here? BWLD. Let's take a quick look. Come on. What happened to it? BWLD. There we go. Come on. There we go. Okay, 194. So it's up fairly decently, but it was up about another 10 bucks and was down as low as 187 when we came in this morning. And, you know, when we look at a lot of these stocks, whether it's Netflix or some of these others that open up big, or Amazon and then sell back off, a lot of these things look like they're in the third gap of a three-gap play. Buffalo Wild Wings, everything was horrible about the announcement. At the end, they said things are looking a little bit better, and that's all anybody needed. And this was actually, it was down in the conference call until the last 2 minutes, and then everybody took off on it. And it was such a small announcement that it made me think, that their same store sales were up a little bit, that it made me think that this was an old-timey operation from long ago, which is they got everybody on the short side at the very beginning of it, and they just took them to the cleaners. If you have enough cash, if you own a lot of the shares already, probably a good deal, because you can bust this thing up. You can sell into the bubble that you create, and it's a great way to get rid of a lot of shares very quickly, and not a new technique for big men of the Wall Street. I'm going to be watching that one very closely. Akamai, same story everybody else has, which is tech kind of really slowing down. What else do we have out here? I've got a few other things. Let me get them up. I didn't have time to get everything rolling out here before the show and make a slide for everything. Shake Shack. SHAK. And I think at the close today, the IPO lockup is over for those folks. And I think that a lot of people were short this one. And again, this was one that was gamed out here. I think they told everybody that had shares, just lay off it for a day. Everybody short this thing. We can take them to the cleaners for about $10 today. Is there any reason why Shake Shack should be up? Nope. But a nice move in the markets. Didn't really move much yesterday. I think they had everybody piling on this thing yesterday thinking that it would go lower today. So we got a lot of these stocks where a lot of shorts are piling on. You want to be watching very closely what the short interest is and how the stock is reacting if you're going to dive on top of these things before news events like this one and their lockup expiration already happening. And I think a lot of people already sold it off in anticipation of that. What we're seeing today is something out of the 2019-99 playbook, and that is the operators are really working overtime these days. Had some other questions about Twitter in the emails here, and I think earlier going ons today in the den. But the question was, what was Twitter's problem? And we said, basically, they have a issue with keeping people engaged because of so many people saying horrible things. But probably even a better model that I thought about since then was the CNN models, because someone brought it up in the den that maybe they found parts of that Malaysian jet. But CNN is one of these companies that has the cable news network was one of these companies that does very well when news breaks, like a war comes out or the missing jet or something like that. On an ongoing basis, it has horrible numbers. And much like MSNBC, just numbers that are very, very low. A lot of times you have less than 50,000 people watching MSNBC and maybe 100,000 people watching CNN. We'll talk about that when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We were talking about Twitter, and I think there's a lot of analogies compared to it and CNN. You've got some cable networks like MSNBC that have less than 50,000 people watching them at the peak. You've got CNN that may not have numbers that are much over MSNBC, except when huge things happen like wars break out or the Gulf Wars, and then they make a ton of money. And Twitter is much more like CNN, and Facebook seems to be a lot more like Fox News in that they always have consistent amounts of people using it. It doesn't seem to matter what the news is. Facebook's numbers are about the same. Same with Fox News. And then you get to kind of see some channels that no one ever watches. And then you get some that are basically news-driven. And Twitter is that news-driven feed, much like CNN. And if there's a war, that's who everybody goes to. But when there isn't one, there are not many people watching it. And I know there's a guy that makes me laugh because they also have a sister network called HLN. He calls it the Hysterical Ladies Network. I think because that one blonde gal on there that's always hysterical. I forget her name. So maybe somebody will tell me what's in it. But anyway, Twitter is much more like the CNN family in that it's news-driven without a lot of news. Or when there's a lot of news, they make a lot of money. When it's not, they don't. But continuing problem is that these guys have real problems keeping people engaged. Eventually, they just give up on it. It's kind of a flood of information without a decent filter. And that until they come up with a really decent idea how to get rid of the knotheads and also make sure that you only look at stuff that really, truly would interest you is problematic. And that's a whole thing that's going on with Windows 10 and Apple iOS and Android, and that's a thing called notifications. And getting that right is going to be the next big step in the evolution of using computers, being online, that too. And that is training these systems to let you know only when you want to be bothered, because, of course, everybody wants to bother you all the time to sell you something or something else. Now, an email, in half a second, I can delete it. It seems like it's a lot more problematic if your watch is always bugging you to check out something. I signed up for Facebook maybe about 3 weeks ago or 4 weeks ago. Since then, I've gotten no less than 4 emails every single day telling me about how many more people I probably know on Facebook, and to get back on Facebook and to do something on Facebook. And really, you haven't checked Facebook in the last 15 minutes? Well, I haven't checked it at all since I signed up. I wanted to see what was going to happen. I don't have time to get involved in a cult like Facebook. I'm sure if you're at 17, you've got a lot of time to do it on your phone when you should be doing your homework or actually paying attention in school. As an adult, I think Facebook probably a lot tougher to get involved in. But I don't know. I just never understood the constant back and forth people have to have on it. There's something to be said for being alone with your own ideas and think and ruminate them about them a bit. But that's it. Volume has really tailed off in the last 15 minutes. Just under 2.7 billion shares. We're still just a hair under 2105 on the S&P cash. So pretty much where we were before we did anything before. So it's probably looking like it will be the last 30 minutes of the day. And now that they have this market up here, we got fund buying coming in at the end of the month. Maybe they'll hold it up here for a day or 2 or 3, trying to push people in at the highs of the market. They've been able to do it for several months, and that is push these markets into the highs. It's almost always been a negative. That is, they get the stock price up fairly decent. They run a lot of shorts out of the market, and these funds continue to sell into it, while at the same time buying all that IRA money on the opposite side and distributing their stock. I think if you're somebody on Wall Street, probably you couldn't be any happier than the market action out here. It's given you a perfect market to sell into over time. And occasionally the market will crack. Then everybody starts singing blue skies again. Market goes back up, and they get right back to selling. But 2108 is the number. That's exactly what we've hit. It's been that number for, what, months now? At 2108, you find massive selling coming into the markets and very little buying. At first, it was little buying. Then it was a lot of selling. And every time we get back up there. So I think you want to be looking at that 2108 number and how it handles it today and by the close to get an idea what's going on. But, you know, I need probably 4.2, 4.5 billion shares on the New York Consolidated Tape to really get me excited about a breakout. 2.7 billion shares, probably going to come in at about 3.5 billion shares for the day, which is not anything, or has not been enough to actually break and hold that 2108 for a while. So we'll get to see in the last 30 minutes. You'll have Tom O'Brien calling the shots going in to that. Got a question about J&J. So let's take a quick look at that. Wow, what a mess this is. And this thing is just making an asymmetrical triangle. So you're going to want to watch which way this thing is going to break out. It's, you know, we had, what, 2 months ago, we had a ton of these stocks. And generally, you just want to fade whichever way this thing breaks out first. And that's it. I mean, you got, yeah, to me, this thing is just hovering around here, right around 100, and that's it. Probably fade the first direction this thing breaks. If it breaks down, you might want to buy it. And if it breaks up, you may want to short it. Just hard for me to see this thing moving that far. I don't think it's going down to 96 in the next few days or up to 104. So, I don't see, you may have a percent and a half up and down on this thing until it decides to finish its consolidation. 2107 right here, and volume very light as it's moving back up to 2108 on the S&P cash. What else do we have going up here? Steel cage, grudge match, other stuff, J&J. Everybody's on Instagram and Snapchat. What about Pinterest? How come no one talks about Pinterest anymore? I got somebody trying to take my Pinterest account. 2106. Yeah, just light and variable here. My guess is we won't see anything until the end of the day. So let's look at some other stocks that are moving today. Real quick, let me update my list of things to look at and stocks that are moving. Wingstop, a little bit of action, pin action off of that. Wingstop, it hadn't been around there this long. Let's see. So what do we got? Yeah. What has it been out? 2 months, but bouncing a little on that news of Buffalo Wild Wings. Volume not a lot in this particular stock, but certainly it's about half of what it needs to get through that July 13th. Not a lot of history on this one so far. What else do I have out here? RJet's bouncing a bit. RJET. On union issues. Let's see what the NU... ongoing labor disputes with pilot union disrupting operations. So this one's popped back up here by about 50% of the candle 2 days ago on the downside, but probably just short covering. Can't imagine it's much more than that. What else do we have out? Splunk, SPLUNK. SPLK is the symbol on it. It's down 4% in sympathy with a Tableau software. I think I am Steve Rhodes saying that's how you pronounce it. I think he thought I was getting on his back. I don't want him thinking about that. It's actually how you pronounce it, Tableau. It's a big word that everybody's been throwing around for the last 2 years. Someone started using it, and then a bunch of people that thought that they wanted to sound intelligent started using it, and then it became the name of this company because they wanted to sound smart. So everybody's running around going, Tableau. It was a tableau of this, a tableau of that. Actually became famous in the lexicon of popular culture because of, what's that show with the serial killer in Miami? Dexter. Oh, that's it. But, Mr. Tableau, is this your tableau? No, it's not. Anyway, I have digressed far and extensive of this. Splunk gave a huge, I'm not talking about a little signal out here. I'm talking about it busting its previous high on, 16 million shares by 1.8 million shares just a few days ago, and this thing did come back. I missed it. I have to say this is one of my fish that got away stories out here, and I saw it and messed up and didn't pull the trigger on it. And I'll be crying all the way to the bank. But it is one of these stocks that did it. But again, I'm seeing so many of these stocks do this, which is push back up to highs, either go over the highs and come right back into the trading range, even with volume, and or test these things with light volume and come back into the trading range. It still looks like we are locked in a more narrow trading range the longer that we go in the majority of stocks. Not all stocks, but the majority of stocks. See what else I have out here on my list. Got a question to take a quick look at the dollar. And, I don't know what else you can say about it. This thing had been stuck pretty much all day at flat at 96.70 earlier in the day. It's now up 6 cents. I don't know what you can say about that. It still looks like 96.30 was everything below that was a false break down. I'm a little surprised that it's not already back up to 100, but it's kind of hard to figure out why it hadn't already started rocketing up, other than the fact that I suspect that the Treasury and the Fed and central bankers around the world are trying to do everything to keep this thing under 100 for the moment. But I think it's probably like holding a dam back. You can put your finger in the dike, but eventually the other leaks are going to eventually erode that dam and blow it out. I'm just thinking that maybe by the end of this week, whatever it is, my guess is it's going to be a huge move, and it's going to go up and blow through 100 on the dollar index, trading out at 86.84 as we speak. See if I have anything else out here. That's it. Yes, and I've got a lot of requests in my email to play the Janet Yellen theme. We will do that in the next segment. Got a question from Rob. You think it's a good time to short the SPQQQs, DIA, and IWM? It just looks like we hit the C point of an ABC down. Rob doesn't say where he's from. I just like to know where you're from. It also helps me remember people if I know where they're from. So, Rob, you might email me back and tell me where you're from, unless you're hiding. Maybe you're in witness protection and your name's not even Rob, but you don't want to even either give your right name and where you're from. But you should do it anyway. Make something up. At least I can remember where you're from. Anyway, I suspect that we can hang out here a couple of days, that at worst, everybody that is on the street is thinking, my God, we've gotten back up to the highs one more time. I get one more time at the another bite at the apple to sell at these highs. I can't believe our great and wonderful fortune. We're going to make sure that we come out with every upgrade over the next couple of days as we go through fund buying, which literally starts today and runs through, what is it? Basically you got Monday and Tuesday that you could even say fund buying is considered in. I just don't see the volume here that would be available. Okay. Jeff in Massachusetts says, I'm surprised you haven't talked about the announcement from Intel MU joint venture about a new type of memory. Any initial thoughts? Well, I think Jeff in Massachusetts missed my show yesterday because we did start talking about it. What he's talking about it, if you were like Jeff and did a no-no and missed my show yesterday, tisk, was a new form of memory. It is technology, why they haven't called it that, very close to a thing called a MEM resistor. Everything today that we have in technology, let's take a quick look at MU today while we're talking about it. The thought out there is that this MEM resistor technology is better for a variety of reasons. And we'll go, I think we only got 40 seconds here. So we'll probably handle it in the next segment. But basically, instead of using a transistor which uses 3 wires to make a switch, you could literally make a switch with 2 wires. And by changing the voltage going in and out of them, you can make it a 0 or a 1. We'll explain more of that when we come back. You can always give me a call at 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we don't have enough time to play the yelling prayer. I'll try to get to it tomorrow. What we do have is some questions. I wanted to finish up on Micron technology, and that is, we talked a little bit about it yesterday, but it is a technology where you basically take a resistor, which is just carbon wound, and just slows down the flow of electricity. But if you put in a lot of electricity, you can change its resistance and the level of resistance. So you can make it and actually if you run the voltage through the other way, hook the plus to the minus, the minus to the plus, you can change it back to a zero. So it's basically a 2-wire version of a transistor. But they can work extremely fast. This technology has been around since, or at least theorized since 1960. The downside, it looks like, is for HP. They've been looking at doing a huge amount of this, and they'll probably still do okay, but I thought that maybe they were a couple of years farther forward than Intel and Micron on this technology. We're going to talk about it at length in the Tech Insider Hour on Friday, so you don't want to miss that. Much like reversing the polarity of a diode in a circuit, kind of, except you have to use a lot of voltage to change the value of it. It's not just 1 volt forward and back. It's like 10 volts forward will make it a 1, and all you got to do is like 1 volt backwards and it turns it back to a 0. It's kind of weird the way the thing works, but you can look it up. It's called a MEM resistor. They did not call it that, so maybe there's a little bit more technology. But what is important is how compact that they can make this, and also how vast the amount of memory that you can access, because it is basically a flat memory trajectory. I can get into the weeds. We'll do that Friday night. But a lot of interesting technology out about it. They will not, although it's in production and they have samples out to manufacturers that may include this in their product from both Intel and Micron, doesn't look like it's going to be for sale until February of 2016. So it's not going to change the bottom line anytime soon for either Micron or Intel, although they are in production in the units. So it's not pie in the sky. It's not something that won't work. And when I watched the webinar last night on it, it was asymmetrical. That is, it reads and writes, they say, at about the same speed, which is what a lot of people thought would be the problem. So it's interesting. Well, we got about a minute and a half left. We got that. Oh, a question in the den about CRM, why these companies have not broken. Well, they're making absolutely huge amounts of money. And everybody thinks that it's on hosting web systems, and it's not. The way that these companies make money is not by putting up systems and letting people use their computers. It is by selling them softwares and software as a service. So Google, Microsoft, all have all this hardware and all these huge, vast amount of systems to store data and run web services and everything else. But that's not it. Once you get involved in these guys, then they're going to start selling you all these neat services, backup services, software that runs your sales and back-end departments. And guess what? They're going to do it all for you, so you don't have to hire anybody new. So just give us a little bit more money. There's no more people. You can get rid of us at any time you want. If business is picking up, you get a few more people. But guess what? Your company never sees it. It never grows and shrinks. It makes it very easy to predict the future. And a lot of other reasons, but that's why they make their money selling software, not being a online service. We'll be back tomorrow, same bat channel, same bat time. Hang on for Tom O'Brien. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.